Good day, everybody, and welcome to the VectorVest International User Group Forum. It is Saturday, December 6th, 2025. They tell us, Susan, Christmas is coming. So we'll see. I saw Badger is already trying to get in front of everybody. He's probably one of the ones who has their Christmas shopping done already and already wishing everybody a happy St. Nick's Day. I think that's what it's about anyway. So Saturday, December 6th, we are in December. Rick Franklin here with you, broadcasting live from the Ottawa area. As usual, folks, this is broadcast live on the VectorVest YouTube channel. So please make sure your computer speakers are turned on to hear the audio portions. And if the video is grainy, make those adjustments and give yourself some higher resolution video. All right, the recording will be available shortly after the webinar. All right, and let me just take a look and see some of the folks we have and where we have them from. I mentioned Badger already. He was the first one in. And yeah, hey, Jack and Jeff. Looks like Jeff from Belgium. We've got, looks like, I don't know, that's going to be DRJ Siegel from Naples, Florida. We've got James in there. Hey, Vojta, good to see you. There's Karen. Raphael from Calgary. There's Norman. Good morning to you as well. There's the governor. Good to see the governor from Newmarket, Ontario. You were almost, hey, Gov, you were almost going to have Le Grand Orange today. I don't know. I might change before the end of this, but not at this point anyway. There's Fred Rowe. Good to see you, Fred. Jerry. And, oh, I just skipped. We got a lot of people. I just want to try to get some. I won't be able to get everybody there. There's Dave from Burlington as well. Tony from the Ottawa area. There's Neil from Toronto. Looks like we've got Yalaha Mike from the mountains of Western North Carolina. Brian from Vancouver, BC. There's Bill Casey from Minnesota. Good to see you there, Bill. Now I'm going to start skipping ahead here, folks. We've got Gil from Montreal. There's Umberto from Bruges, I think Belgium, right? There's An from Sacramento, California. GM from Virginia. Adrian from Richmond Hill. Hey, Marvin, good to see you there as well. We've got Janty from LA. Moapac from New York, or that's Rick from Moapac, New York. All right. I was looking to see if we had anybody from Australia in the house. We have, so we've obviously got Canada, US, Europe represented so far. Haven't seen anybody from Australia, but usually have folks in from there. Truly international. There's Ken from Warsaw, Poland as well, and Russ from Oregon. All right, we've got a lot to cover here, folks. Let's get into the risk disclaimer first, I guess. As everybody knows, there is risk in investing. Everything you will see and hear today is provided for educational purposes only and should never be considered as investment advice. The information is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. All right, so with that, we jump into the agenda. We've got the welcome and the risk disclaimer behind us. Here you can see we'll do our global market review, folks. Once again, my pleasure to be able to host the event. And yeah, we'll do our global market review. Trade ideas, we're going to talk about commodities. And then we are joined by none other than Susan Hayes Culleton, Managing Director of VectorVest Europe, for her keynote presentation, Navigating Earnings Season with VectorVest. Susan, we have to stop meeting like this. It seems like the end of every earnings season, we see Susan make her rounds. So
yes, indeed.
Great to have her with us. So we'll do all of that before adjourning somewhere around 12:30. And as I mentioned earlier, since this is broadcast live on the VectorVest YouTube channel, it will be available pretty much immediately after the webinar is done. All right, so let's jump in and get things rolling here. We're going to start with the global market review. I don't know. I know the markets were rocking and rolling for the U.S. Thanksgiving week. They weren't quite rocking and rolling as good last week, but let's take a look and see where we're at. So November, you can see wasn't overly kind, was it? You can see Canada had the best November return there, up 0.36%, followed by the US at 0.15. European Union down 0.60, and Australia down 0.78. Year to date, though, not too bad. If you look, Canada leading the way, 14.40%, with just less than a month to go to finish out the year. Then we've got, look at that, we've got a tie, the US and the European Union at 10.64%, and then Australia at 8.54%. All right, so that's how all of the VectorVest nations are looking. Here's the color guard for Canada. There you can see that 14.40% year to date. And you can see the Canadian color guard finished off one tick into the red. Color guard is mildly bearish. VectorVest does not advocate buying any stocks at this time. Unfortunately, they lost the primary wave in Canada on Friday. All right, one of the reasons why we're not advocating buying any stocks. However, as I mentioned Friday in the timing the market, with the Canadian VectorVest composite not typically gapping, you should see the primary wave turn back up when the market opens on Monday. We'll just have to see if price action is going to allow us to keep that primary wave. All right, but you can see clearly in the extended version of the color guard, the transition from when we did have the market pull back. You can see some red lights left over at the end of the color guard here. We transitioned into yellow, got into green lights, even got into 3 RT kicker confirmed green lights in a row this past week before looking at that one red light in the BSR column. All right, and you can see the MTI was able to get back over 1, taking us from what was at this beginning of the time period here, down situation. We were eventually able to get back into an up, also got the confirmed up call back into an up position this past week before losing that primary wave and going to a down up, short-term downtrend and an underlying uptrend in the Canadian market. All right, here is a summary of our proprietary market timing signals. You can see, as we mentioned, confirmed calls turned back up on the 2nd of December. The DEW turned back up on the 26th of November. Green light buyer, neutral. From the 5th of December, the primary wave turned down on the 5th of December. All right, that being Friday. Looking ahead to the U.S. market, now the U.S. were able to put in a half-decent day on Friday, so their market timing gauge needle straight up into the yellow, and guidance that reads the color guard is neutral. VectorVest advocates caution when buying stocks at this time. All right, so you can see the transition on the U.S. color guard as well, from the red lights into yellow. I mean, the color guard gives us so much information, folks. There you can see that first green light put in the price column, a bit of yellow in there, and then look at that, 4 green lights in a row in the price column. And the last couple sessions, the US was able to get the kicker behind them, and now we've got RT kicker combo confirmed green lights, 2 of them in a row. However, if you look at the last day at Friday, we've got Todd Schaefer's favorite set up there, not just the Christmas tree color guard, but we've got the Christmas tree color guard all in one day. You can see the US ended up with a green, red, and a yellow. You can also see the MTI able to get back up above one there as well in that 1.07. So the US finds themselves in an up situation, short-term uptrend in an underlying uptrend. Really need that BSR to kick in and get above one in the US market to see if we can get a change in confirmed call signal. All right. There you can see the 10.64% for the US year-to-date return. And here's a summary of their market timing signals. Confirmed calls down since the 6th of November. The DEW turned back up on the 28th of November, green light buyer, up since the 2nd of December. And the primary wave turned back up on the 24th of November. All right, so that's the North American picture. Let's jump over to Australia next. And here you can see the Australian year-to-date 8.54% return for that Australian VectorVest composite. Little bit of a different picture in Australia of late. So you can see the transition there too, but it doesn't look like it quite took off the ground, and we're still seeing red lights come into play here. Even in the last sessions, you could see on the fourth red light in the RT column and the BSR column. You can see none of the indicators operating above one. In the Australian market, they find themselves in a down situation, so short-term downtrend in an underlying downtrend. And if we look at a summary of the market timing signals, you can see a lot of red in the land down under here. So confirmed calls turned down on the 5th of November. The DEW turned down the day before that, the 4th of November. Green light buyer's been neutral since the 28th of November, and the primary wave turned back down on the 4th of December. All right. Moving into the European Union. There's the European Union with a 10.64 year-to-date return. And there you can see much more aligned with the US at this point. Market timing gauge needle, one tick into the green. Guidance that reads the color guard is mildly bullish. VectorVest advocates buying safe, undervalued stocks that are rising in price at this time. And we can see that transition, yellows, a few reds to finish things off. But look at the green lights that came in starting on the 24th of November. So they definitely caught the fever of that US Thanksgiving rally that started up a number of days there with 3 green lights across the board. And then you can see as we closed out last week, they were able to put 3 green lights together. Interesting how we have, so you know that the GLBRT kicker moving averages are very close and kind of intertwining. Intertwination, as our great friend Glenn would say, because you can see we end up with an RT kicker combo confirmed green light in between 2 green lights without the flashing asterisk there. All right, you can see our proprietary market timing indicators all operating above one in the European market. They are in an up situation. And if we take a look at a summary of their market timing signals, everything in the green, folks. Getting ready for, well, maybe a green Christmas there. All right, so we've got confirmed calls up since the 3rd of December. So recent changes here. The DEW turned up on the 4th of December. Green light buyer up since the 3rd of December, and the primary wave turned back up on the 25th of November. All right, so that's the color guards for all of the nations. Here's the market timing graphs. So you can see Canada here first. You can see with Canada, graphically at least, the MTI and the RT operating above one. A buy to sell ratio still hasn't joined that party. And then you can see that price action on the Canadian market back above the 65-day moving average, and looking to challenge previous swing high resistance here. All right, so we're hanging out right between resistance and a support level that's already been tested in the last week. All right, so waiting to see next week if we're going to get a push up and be able to push through resistance or not. If not, we'll have to see if this support can hold. You can see the 65-day moving average hanging out in between a couple levels of support there as well. All right, so that's the Canadian picture. Here's the US. So the US, you can see the MTI operating above 1, buy to sell ratio and RT haven't joined yet. And the US finds themselves in the same situation here. They've just retested resistance, got above that on Friday. We're going to see if we get follow through, and then we have another very close zone of resistance from the previous swing high as well. So we're in the same boat there, seeing if this market's going to be able to push through resistance and continue to move higher, or if we do pull back. We do have some levels of support that have already been tested, a fairly close one here, and then you can see the other one picked up by the default settings of the support and resistance indicator. We can also see where the market's pulled back in that most recent pullback leading into that US Thanksgiving rally. All right, so that's the US picture. Here is Australia. So you can see Australia color guard looked a little different. They're in a little bit of a different position here when we look at the market timing graph as well. All of the market timing indicators operating below 1. And you can see the Australian market just flirting with the 65-day moving average in between a level of support and resistance. And really they're kind of dancing on either side of the moving average right now, operating a bit below. So we're going to have to see if they're going to be able to push through the 65-day to be able to challenge some of the overhead resistance they have. If they're not able to get through the 65-day, you can see they've got a pretty good area of support right in around the 440 level. All right, before we get down to some of the other levels there. That brings us lastly here to the European Union, and it's looking quite like the US and Canada. You can see they're operating above the 65-day moving average there as well, and challenging previous swing high resistance in the European Union market as well. All right, so same story there. We'll see if they can keep moving 3 up days in a row there, see if they can push through resistance, get confirmation and keep moving higher. If they pull back, looks like we'd be looking to the 65-day moving average, which has been providing support in through the last week quite nicely. And then you can see the other levels of support if that fails to hold. All right, so that's the market timing graphs for all of the nations. That takes us into the global market tracking ETFs. So you can see for November, we've got 43. These, of course, found in the US software. We have 43 of these global market tracking ETFs. And for November, 29 winners and 14 losers out of that basket. You can see overall, they were able to put in a gain of 0.94%. So they did outperform the VectorVest composite 0.15% for that same time period. And for November, you can see Brazil, Chile, Greece, South Africa, and Switzerland rounding out the top 5. You can see Canada was able to sneak their way in there into that 6th position before Hong Kong, Spain, Mexico, and Peru. You can see how things were looking quite a bit different in October. All right, and then if we go to the next slide, we've got the same November picture on the left side, and then we've got the year-to-date picture on the right. So you can see year-to-date pretty good year for these ETFs. 41 winners, 2 losers. All right. As a basket, 30.48% return. So greatly outperformed the VectorVest composite at 10.64% for the year so far. And you can see rounding out the top 5, you've got South Korea out in front at 85.3% return, followed by Greece, Peru, Spain, South Africa. So that's the top 5: Poland, Chile, Italy, Mexico, and Brazil, rounding out the top 10. All right. And at the bottom of that list, Brazil still in at 44, just over 44.5% return year to date so far. All right, so pretty good year for the global market tracking ETFs. Here you can see the market sector ETFs. So these, of course, in the US software as well. You can see they're in the watch list and the cherry pick and folder from the watch list section. Year to date, well, we know that gold has had an excellent run, and you can see 30 of these ETFs. We've got 27 winners, 3 losers year to date. As a basket, a 21.21% return against a 10.64% for the VectorVest composite. And you can see GDX gold miners at the top of the list, just shy of 139% year to date. And then rounding out the top 5 here, you can see metals and mining, clean energy, semiconductors, and solar. Then we've got biotechnology, technology, US telecom, comm services, and next-gen medium and gaming to round out the top 10. All right, so the top 10, everything from just shy of a 20% gain to the close to 140% gain for the gold miners. All right, so that takes us through that part there. Central bank rate announcements. We've got November behind us. We could see the only ones we were really tracking in November, we had the Reserve Bank of Australia hold. So they didn't get another interest rate cut there. The Bank of England held as well. And I think that was it. Looking at December, big month in December, and especially this week coming up, folks. We get right into it in this coming week. So you can see on Monday, the Reserve Bank of Australia kicks things off. Looks like forecast for a hold there again. Then on Wednesday, December 10th, we've got the Bank of Canada. Looks like the forecast for a hold there. We've got the US Fed on the same day. Looks like we're looking for 75%, or sorry, 75%. Wouldn't that be something? A 0.25% interest rate cut. Last I looked, it was just shy of about 90% on the CME Fed Watch for that 0.25% cut. All right. So those are the big ones on Wednesday. And then if we go into Thursday, December 18th, you can see we're going to have the Bank of England, the European Union, and Japan will be the ones we pay the most attention to. All right, so Wednesday of next week, and then Thursday of the week after. And then you can see December's closed out with Susan's favorite December 30th FOMC meeting minutes that she thinks they should just hold off until January. Give us a break, folks. All right. So that's the central bank roundup. As I mentioned, big week next week, and then the week after might end up playing a significant role as well. All right, here is a summary of the essays from around the VectorVest world this past week. All right, so out of the US, we've got one written by Angela Akers entitled Beat the Market, How to Use VectorVest to Find Prudent Stocks That Allow You to Consistently Beat the Market. We've got Stan Heller. I think maybe Don is off on holidays. One of Stan's old essays entitled "Follow These 5 Basic Rules for Picking Stocks: How to Use VectorVest to Follow the 5 Simple Rules to Find the Best Stocks to Put in Your Portfolio." None other than Susan Hayes Culleton out of the European Union, with one entitled "What is a Short ETF?" So she goes through explaining a short ETF and how to use VectorVest to find the best short ETFs to meet your goals. And then Australia, Robert and Russell Markham wrote one entitled "Battle of the Commodities: How to Use VectorVest to Benchmark the Performance of Various Commodities Using Performance Graphs." All right, so another great week of essays, folks. I know it's early, it's just Saturday morning. Well, it's Saturday afternoon for other folks. Um, so if you didn't get a chance to get to all of these essays and do find something that interests you, just know that you can log into VV7, VectorVest 7 software. You can select the flag of whatever country you want to log into. Log in as per normal with your normal username and password. And then you can go to the views section, go back to last Friday and check out the essays there. All right. That brings us to the December Almanac. December has historically been a good month for investors. And basically, according to the VectorVest Almanac, December shows a record of 19 wins, 10 losses in the last 29 years. We've got a 66% win rate. Average gain comes in at about 3.32%, while the average loss comes in at 2.90%. All right, so Angela does remind us that, we've got a lot of issues that could affect the performance of the market. We've got the, is AI real or not? All of the circular financing that's been going on in the AI circles. We've got extreme debt by a lot of nations, and we've got the interest rate decisions, etc. So we'll have to see. I know everybody's trying to figure out, are we going to get that Santa Claus rally, or are we going to get a Grinch sell-off? We'll have to see how things shape up. All right, so that's the December Almanac. Here's the earnings update from Angela's essay as well on Friday. So we're just closing out Q3 2025 earnings season, and you can see we're already getting estimates for Q4 2025 earnings, and estimates right now at 7.7% earnings growth. And she states if this is the actual earnings growth, it'll mark the lowest earnings growth for the index since Q1 2024. All right, so that's the earnings update from this past week. Okay, that takes us into trade ideas. I mentioned what we'll take a look at here is commodities. Now we do look at commodities every week on the weekly market update on Tuesday. All right, so we're going to do the same thing here. We're going to just stick with the US. So I'm going to look at the US here, folks, because typically when it comes to these ETFs, they have a lot more volume than the other markets. But I can tell you, on Tuesdays, we look at both these for the US and then the Canadian versions of these. So if you're in the European Union or Australia and you have your own version of ETFs that follow the same commodities we're tracking here, you'll find that these line up fairly well. All right, so GLD for physical gold on the US side lines up fairly well with PHYS, for example, in the Canadian market that tracks physical gold. All right, so, and maybe just before we do this, I'm going to add in here the Huey, and we'll change our graph layout for this one to the Midas Touch graph layout. Now, folks that follow VectorVest for a while know the Huey was brought in as a medium to long-term timing model for investors that want to take position in gold miners. All right. It's not a trading tool. It's an investing tool. It's medium to long term. All right. But you can see that it's made up of a few different components. We've got the upper graph that has a moving average on stop, a 10 moving average on stop, and a 65 moving average on stop. And then the graph down below, we've got a 40 moving average of RT. All right. Bullish indication is when the 40 moving average of RT is above 1, and we've got the 10 moving average above the 65. Bearish formation would be the opposite. All right, if I kind of drag back here a little bit, you can see when you end up with the 40 moving average below 1 and the 10 moving average below the 65. That's bearish formation, and both have to be true in both cases. All right. So going back to our year time frame, we can see that 40 moving average on RT still operating above 1, and the 10 moving average still above the 65. All right, the 40 is trending down at this point, but you can see in this run up where and the run up in gold has been going on for over a year already. But you can see there are times that that 40 moving average has turned down where we maintain the 10 above the 65. All right. So that's the Huey. If we go to GLD to look at physical gold, I've got the NPI set up on here. All right, so, and that's the near perfect indicator. You can see from the near perfect indicator standpoint, we've got on this setup a 5 and a 40 moving average of RT on our lower graph. We've got a 5 and a 40 moving average of stop on the higher graph. All right. We're looking for 5 moving average crossing the 40 as a trigger. And we're looking at so that's on RT. And we're looking for the 5 moving average of stop to cross above the 40 moving average of stop for a trend indication. All right. So when we're looking at this, you can see we've had a trigger breakdown on GLD. However, we have the trend still intact, as you can see that 5 moving average still operating above the 40. And you can see with GLD is hanging out in between support that we have nailed down here at 373.08 and resistance, our previous swing high resistance at around 403.30. All right, we're moving, I guess, a little bit over the halfway point, closer to resistance at this point than support. So we'll have to see how the underlying does to see how GLD is going to play out. A lot of people think that gold still has quite a way to go, and we know these things don't run in straight lines, folks. So right now, nicely in between support and resistance. We'll have to see if we can get a push up, whether we can push through that 403.30. If we get a pull back, you can see how 373.08 held nicely through this area here. All right, so that's GLD for physical gold. Here's GDX, gold miner ETF on the US side. From an NPI perspective, you can see that we have lost trigger. We still do have trend in play. And with GDX, GDX came in just in the past week or so, retested resistance from that old swing high. You can see that was rejected. They came right back to support. You can see the old top in here, this area here as well at 79.44. So they've retested support, and as of Friday, took another run at resistance, ended up with a closed red candle on Friday. All right, so that's the gold miner story through GDX. Here's SLV for physical silver. Now, commodities typically run up in the last part of market cycles, and silver typically runs later than gold. So here, when we're looking at SLV for silver, You can see that from an NPI perspective, we have both trigger. You can see that 5 moving average on RT. Did come back in this time frame here, kind of kiss the 40 moving average, but turned back up again. All right, we still have trend intact with that 5 moving average, a stop above the 40. And you can see silver has been able to break past the previous swing highs here and actually put in a new high on Friday. Silver had a pretty good day on Friday. All right, did finish with a green candle there. Looks like a bit of a shooting star. So once again, we'll have to see how silver plays out next week. But silver has really been breaking out now a bit better than gold of late. Here's XLE for energy or petroleum sector in the US. You can see they just did a 2-for-1 split on Friday. All right, from an NPI perspective, you can see they have trigger, they do have trend, and it looks like I've lost my all of the support and resistance I had on this graph. We were tracking longer term channels. And the top of the channel takes into account these old tops here. All right, and we had a wider channel going, and then we had a bit narrower channel going here as well, and the narrower channel operating in around this space. So we've broken out of the upper bounds of the narrow channel. What we're waiting for, and you can kind of see that on Friday, XLE might have got in and at least tested the zone at 47.13, this zone of resistance, but it hasn't been able to get through resistance here at 47.13 for quite some time. You can see those tests back in, it looks like January, February, March, April timeframe. All right, so it has been moving up. Remains to be seen whether it's going to be able to push through 47.13. If it can't, it now has 45.29 as support, first level of support. Here's a CPR for copper. So copper, we've got trigger, we've got trend from an NPI perspective, and you can see copper's been able to break past some swing highs here that were providing resistance just in the last week or so, and able to put in a pretty good day on Friday as well. You can see if it does keep running, it looks like we're pushing through this old swing top here as of Friday, but you can see we've got the other swing high here in around 36, call that 36.65-ish. All right, so that's the copper picture. Here's Euro for uranium. So uranium's pulled back. We've lost trigger. We've lost trend. Now trend at this point wasn't a deep pullback. You can see the 5 moving average of stop below the 40. And it looks like it might have just crossed over, not getting close to cross over just at the end of the week, but you can see it is trying to run up again and right up against resistance here at around 50, 57. If it can push through that, you've got the previous swing highs, the highest one here in around 59, 67 level. If it does pull back, you can see we have support right down here at about 42.17 that held nicely back in November. All right, you can also see with the latest uptrend here, you can see that 5 moving average of RT hook back up around, start moving up. So if we can continue to see Euro move up, we'll see if we can get another trigger cross. All right, so that's Euro for uranium. Here is LIT for lithium. So lithium, from an NPI perspective, we've had trigger breakdown, so no trigger. We still have trend, and you can see lithium has been running right up against previous swing high resistance here at 63.85. All right, it's been hugging that for about a week. So we'll have to see if it can push through that and keep the party going. If not, we have this level of support that's been tested a number of times in the last month or two at around $60.04. All right, you can see some other levels further down. All right, so that's a quick run through commodities picture through some ETFs on the US side. As I said, if you have similar ETFs in each of your countries, you should see that they do mirror these ones quite good. You'll have to make sure if you're looking at physical gold, you'll have to look at a physical gold one in your own country to make the comparisons. All right, so with all of that said, that's going to bring us to navigating the earnings season with VectorVest. So keynote presenter for us this month, folks. Once again, no stranger, I think, to most, Miss Susan Hayes Culleton, Managing Director of VectorVest Europe. It's all yours, Susan.
Thank you very much indeed, Rick. And hello, everyone. It is lovely to meet you there from all around the world. I have been watching what's been going on there in the chat. And of course, before we started as well, I also put my own message in there to say that I was really looking forward to talking to you today. So what I'm going to do is first up, Clay, can I ask you to just move me full camera, please? Because I just would like to have a chat with everyone before we get started here on my side of the house. So here's what I would like to talk to you about today. As we come towards the end of 2025, I think it's worth reflecting on where we are and where the year has brought us at this point. I've been very fortunate at this stage to have been with VectorVest for, I'm coming up on 15 years next year. And so I have I've had a lot of insight over the past 15 years, but I do think that it's worth thinking about what has happened in the past year in particular. And one of the key things that we've focused an awful lot on has been on the Mag 7. And so one of the things I want to talk to you about today is I think that has distracted us from a range of things. And I'm going to talk to you about what those are. Second, I do think as we look back on the year, another thing we could just think through is the fact that we have had a relative outperformance in Europe, and Rick has brought us through some elements of that. So I'm going to talk to you about that as well. Another big story of the year has been GLP-1 drugs. A lot of people have referred to Ozempic as the only one. And I want to look at Novo Nordisk versus Eli Lilly and talk to you about the changes that are happening there. And then what I'm going to do is I want to do a deep dive into Dollar General's earnings. One of the reasons it was out this week. One of the reasons is that it has had a massive reaction to its earnings. I do want to get into why, though, because the earnings jumped dramatically. Obviously, the stock followed through as well. But I think it gives us an insight into where the world is at in terms of cost of living, and particularly as well, if you strip out the AI developments in the stock market, it hides a picture of a more cost conscious and a more income pressed from an inflation adjusted perspective American customer. So I think it's important to look into that. But it is also, of course, from a stock market point of view, very important to look into where do we think this stock is going. Okay, so that is what's up for grabs today. As I take a look over here, and I'm just going to keep a good eye there on what you're telling me there in the chat. Please do keep your comments coming in there. So can I ask you, what do you think are the key stories of 2025 that has characterized the year? I'd love to hear what you have to say. So like I say, in summary, mine would be relative outperformance in Europe, big focus on the Mag 7, not really sure it deserved it because I think those other stocks that have done very well and that got less of a focus. Of course, potentially the AI bubble, we could look into that as well. GLP-1 drugs and how that's been a big story economically, socially, health-wise, and of course in more recent times politically as well, given the developments there for what the US government have negotiated, both with Medicare and also given the new 0% tariff between the UK and the US around pharma as well. And then, of course, the other element is, like I say, Dollar General. Salesforce had their earnings out this week. I'm particularly putting the focus on agentic AI. We've seen Netflix, of course, making a big purchase there. That announcement was yesterday. So what do you think? Oh, of course, yes. Please do keep them coming here. Yeah, reset to gold. Yeah, the particularly, and I know there Rick was talking about that we've seen a a big drive for gold, but there could be more there. I certainly think that when we come to looking at gold from a perspective of a hedge against uncertainty, this year has been packed full of uncertainty. From a European perspective, a lot of things changed for us in July when that EU-US tariff rate was agreed. And that has held true, but certainly that has been the case. What else have you got? Tariffs, AI, and now the Fed again. Yeah, well, so from where I'm sitting, the Fed has been getting headlines over here for two reasons. Number one is because, of course, of interest rates. Like inflation was very high at the beginning of the year. Then the Fed was saying they were going to be making decisions from a data-driven perspective, as they should. Then when we saw that inflation was dropping, but particularly there was emphasis on the labour market, then we saw that there was a price cut or an interest rate cut priced in, which of course happened. And now, and again, Rick mentioned it earlier, it looks like we're looking at the next one will be a cut. 90% chance is what the markets are thinking. And I'd have to agree with that. But also, of course, the other big issue there is the independence of the Fed. We are, of course, looking at a new chair next year. Several names have been put forward, coalescing around one, but that has also been the second story. What else? High debt worldwide, yes. Yes, indeed. And, you know, when I look at what the big bodies have been talking about, whether it's the ECB, the European Central Bank, the International Monetary Fund, the Fed itself, what we're seeing coming through in the beige book, all of those are pointing towards that as well. Gold stocks, uranium, copper stocks, gold to stay. Interesting. AI rollout. Yeah, I'd agree with that. Now, I would think AI is here to stay. I do think AI is being rolled out. I do think the focus is on generative. I don't think there has been the same reaction to agentic. I don't think the world trusts agentic to the same degree because, of course, then you're dealing with a touch point between a customer and a company. Internal agentic AI, I think in companies that probably has more scope to grow. Perhaps it'll be a story of 2026, but generative, I'd say we're there. Politics above all, yeah. I mean, look, we've had some really big elections this year. We had the Canadian election, obviously, and Mark Carney won that. There was the what happened in November all around Mamdani in New York, and then how that was replicated in other parts of the US, particularly around Virginia, New Jersey, etc. Then we've also seen some pretty important elections in Europe. Then, of course, in France, we have seen significant political upheaval over a disagreement around the budget, 5 different prime ministers changing over. So we've seen that. Silver in short supply, yes. Silver in short supply, and actually silver in short supply, particularly in London, as distinct to the US. And then we had the CME outage, which exacerbated that. Why do you care what we think? Why do I care? Well, of course I care, because it's interesting to hear what you have to say about the markets, because fundamentally, remember, the market is driven by collective behavior. So it is important to hear what you have to say. Potential for great job losses. HP, of course, had a result out there about 2 weeks ago. Hewlett Packard, that is, saying that they were cutting their workforce by 10% due to AI. Earnings growth in S&P 500 rates trending down in the US. Yep, both of those. Build-up of defence in Europe and Canada. Big story in Europe, yes. And that does tie in with one of the reasons that we've had a relative outperformance this year in Europe. So, got a range of answers in there. Please do keep them coming. And by the way, I will ask several more questions because I do believe that it is important, certainly, to hear from you. Okay, first up, let's talk. I'm going to talk about Europe. So, here's what I'm going to do. I'm going to show you a comparison. I'm going to share my screen now, Clay, please. Okay, so I'm going to show you a comparison with what has happened. Let me just share my screen here now. Okay, so I want to pop over here to my viewer, right? So all the focus this year has been on the Mag 7, right? It's now a third of the value of the S&P 500. Enormous amount of conversation has been about it, including myself. And indeed, any of the other people who are writing the essays, you will see us talk about it. And we talk about it because, going back to the point about why do I care about what you think? Because this is what people have been talking about. Okay, now, beginning of the year, here's where we stood. NVIDIA was the leader of the pack in terms of VST. They were all well above 1. Google then was the next one. Amazon came next. Meta came next. Apple came next. Microsoft came next. And of course, Microsoft has Copilot. And then Tesla came next at that point. Okay. Now, let me run a quick test of, let's say I bought the basket of the 7. And where would I be by now? Here we are. Okay. So NVIDIA was a very impressive performer at 31%. Tesla, now it went through a rocky road, particularly around about the middle of the year, but that's up 19%. Amazon, single digits, 4.3%, well, 4.23%. Meta, 12.38%, particularly had a good week this week since it announced a 30% budget cut for Meta, or for the metaverse. Apple, we've seen an increase of 14.32%. Big conversations about who might replace Tim Cook should he step aside next year. As I mentioned, Microsoft, driven by developments in Copilot, big investment in OpenAI, a range of other things, their growth from LinkedIn, etc. But the big winner at this stage in the year has been this one, has been Alphabet. Now, if I was speaking to you a month ago, right, I think I would have been talking about very different things. I'd have been talking about how NVIDIA, I just want to highlight the Google return here. I think I would have been talking to you about the speed at which NVIDIA went from a $4 trillion market cap to a $5 trillion market cap. I think I would have, I wouldn't have been talking about Gemini 3 because it hadn't come out yet. I would have been talking about the sheer increase in the volume of NVIDIA's sales, particularly when its revenue was out in its last earnings call, it did a revenue beat, particularly for what had happened in the quarter. So what is now the focus is on Google. And why? Okay, number one, it has leapfrogged ChatGPT. And that is a very important point. It is leapfrogged. So I saw the CEO of a big company recently. I'm trying to think. I saw the tweet that went out saying that they had used ChatGPT every year for the past 3 years. And now they're after spending the last 2 hours on Gemini, and that has changed their perspective. I must get that for you now before I go. And that's an example of the features and the functionality of Gemini is now questioning, can it leapfrog ChatGPT? Now, ChatGPT is, of course, run by OpenAI. OpenAI is now facing talent retention, massive soaring costs of data centers, and of course then to keep focused on the technology race that is AI production itself. The other thing is ChatGPT is levering NVIDIA's chips, which of course would be quite expensive, and NVIDIA is doing its best to come up with and deliver upon its supply demands. Whereas on the other hand, Google has made its own custom chip, so it's not reliant on NVIDIA, or indeed it's the cost base of NVIDIA. So in fact, as we come to the end of 2025, the big story here is Alphabet, not necessarily the others. However, now what I want to point out to you is this. Look, if we add all those up and we divide by 7, the average return here was 23.88%, right? In comparison, the S&P 500 has delivered 17.28%. Now, it's important that we compare and contrast what Rick was talking about with his 10.64% year to date of the US market. Because the S&P 500, a third of the value is driven by market cap, is driven by these 7. So the S&P 500 minus the Mag 7, right? So that's 493 companies, is now responsible for 2/3. But when you think about the broader stock market, it's not telling you the same story. If we were to take out the AI-related drive, the AI returns, the US stock market and indeed the US economy looks very, very different. And particularly that is driven by the cost of living, and that is also driven by a decline in the number of manufacturing jobs and other points that, of course, we could get right into. So what I want to do is now bring you over to another part of the world, namely my own, and here is what I would like to show you, right? So let me instead, let me see here what else we got. Build up of defense. Yeah, and then another person said fear of a recession. Well, you would wonder if you were to strip out the AI-related spending and development, is there an industrial recession already in play in the US? Anyway, that's why I wanted to talk about Dollar General, is I want to understand with you where the US consumer is at that particular stage, particularly in rural America. So here we go now, right? These are the top 10 companies in terms of VST in Europe. And this is, if we take a look here at the VSTs, right? So the VSTs in these cases were actually higher at the beginning of the year than much of the Mag 7. Okay, so if we go back here, the Mag 7 was 1.46 down to 1.1, whereas here at the beginning of the year, the VST were much higher. Now, I don't think there's any surprise there. I picked out the Mag 7, which were not the top 10 VST stocks at all in the US at the time. I'm just picking up on the ones that I do feel we have spent a disproportionate amount of time talking about. And therefore, one of the reasons that I want to focus in on this is what has that focus been distracting us from. So now when we look here, if I had taken the top 10, right, and I actually bought Heyman's myself. I didn't buy it at the beginning of the year. I bought it a little bit later on. Rheinmetall, I wish I did, right? You'll see why. Wisdom Tree Cocoa, some of you there were talking about silver. Cocoa is another one that had a very significant rise in price as a commodity. You see Leonardo over here, International Consolidated Airlines. Some of them might be familiar to you, some of them might not, but let me show you now, if I just run a quick test of these top 10, I'd have delivered 33%, 33.53% in comparison to the Mag 7, which everyone has been talking about. And if I was to just compare and contrast here, that, just to remind you there, was 23. So I could have done 10% more, right? So I could have got an extra 50% out of the return on investment if I'd gone with the top 10 stocks in Europe. And by the way, do you remember, particularly back in April, round about Liberation Day, the world questioned, were we at the end of US exceptionalism? That went on for months of the beginning of the US, of the beginning of the calendar year. And then as we went on and we saw the sheer capability of US companies to deliver earnings quarter over quarter, and so many times we've seen revenue beats, earnings beats, that question kind of went away. But what I feel did not get the attention it deserved, and of course you might say, well, Susan, of course you would say that. You live in Europe, you live in Ireland, you're a European focused investor, you invest with euros, you're biased. I might be, for all those reasons. However, I certainly have seen the benefit in my portfolio. And that's why, since I have the delightful luxury of being able to speak to you from my own perspective, that is one of the things that I wanted to bring up to you. Okay, now, where are we at today though? That is the question. So what I'm going to do now is I'm going to close down my quick tests. I'm going to close them all. Let me change my calendar and I'm going to go to today, right? So where do we stand right here? So of course, this is being delivered live to you. The markets are closed, but as of my clock here, it is 2 minutes to 5 p.m. on Saturday, the 6th of December. So this is being delivered to you live. I'm just letting that the calendar there update. And what I'd like to do is take a look at where we stand today. Okay, so first of all, as you can see, Heyman's is still very high VST. I'm holding on to it in my portfolio anyway. We still have some very interesting companies. Very interesting companies. This over here is in Athens. We've got the Barrick Mining Group here in Germany. Synergy Holdings, that's been there forever, in Athens as well. Siemens, a company probably known to many of you in the Netherlands. Oh, sorry, Germany again. Wisdom Tree Natural Gas, 3X. Now, as Rick pointed out there, I wrote about a short ETF in my essay this week. There's also leverage ones. Personally, I wouldn't be a big fan of them, and that's just because I'm an investor, not necessarily a trader. Technoprobe here is in Milan, which is an Italian one. 3X Silver, as you can imagine, rocketing at a pace. Traders product again, still available to anybody. In Milan, Heyman's, like I mentioned, Indra Sistemas in Madrid, and Hochtief AG as well in Germany. Look at the CIs over here. Look, apart from the natural gas one, understandably, it's anything that's leveraged is going to be hugely volatile. So I wouldn't necessarily take any notice of that. But looking at some of the other companies, look at those CIs. Like 1.9 of a CI is enormous. 1.9. Now, if anybody has not been on an international forum with me before, let me tell you, my two favorites of the indicators in VectorVest is, first of all, is VST, value, safety, and timing. Value is long-term price appreciation potential. Safety is predictability and consistency of earnings. Timing is dynamics, direction, and magnitude, and dynamics of the share price. This packs a massive punch. It factors in fundamental and technical analysis. It gives you the story of a stock in a number. Above one is favorable, below one is unfavorable, and the closer to two, the better it is. Right, that's it. I really like VST. It has been very kind to me in terms of helping me pick a stock, as I say, like Heyman's, so I really like it. But I am also a long-term type of woman. I like to invest in stocks for with a view to really holding on to them for a while. Now, I'm certainly not averse to selling them after a short period of time, but I I'm a busy lady. So I don't like hopping around in and out deciding whether I'm going to sell today or sell in a few hours' time. I like I like thinking about investing in companies that can generate earnings quarter over quarter, year over year. And there's been stocks like the Irish company CRH, excellent company. I had that for about 10 years. Um, there's been other ones over the years that I didn't have anything as long as that now, but certainly there's been other stocks, many of them known to you, that I've held on for quite a significant period of time. So I like the CI. The CI is the comfort index. It's a stock's ability to withstand severe and or lengthy price declines. I don't want a lengthy price decline. I want a lengthy price incline. So therefore, I like looking at the CI. I really do. And I've several other thoughts around the different indicators as well, none of which we've time to go through today, unless you ask me. Hold on there now. Let me see here. What do I get? Susan, same results for European small caps. Interesting, Dave, you mentioned that. Another big story of the year is that actually small and mid caps have outperformed the large caps. You see, this is my point. This is why I really like VectorVest. It does not go with what the news flow is saying. And I like news flow. I'm part of news flow. I watch the news and I like critiquing it and figuring out what's going on in it. VectorVest doesn't care because it's algorithmically built in order to put forward the stocks of the day. So when I went in, let's say last year, and I was looking for an investment in the US, I bought Interactive Brokers, spectacular stock. And I'm a customer of it, and I've been on the earnings call. I've spoken about it on this forum. Spectacular stock. No one was talking about it necessarily at the time. What people were talking about was Robinhood. They were talking about Coinbase, but VectorVest simply picked out the stocks with that largest VST elements. So that's why when it comes to looking at the US stock market, it's not saying everyone's talking about the Mag 7. Let's look there. It simply picks out what it feels is the best combination of value, safety, and timing. That said, now, Dave, I'm not your, I don't like penny stocks. I certainly don't like stocks that are illiquid. So, and sometimes small caps can come with both of those territories. And of course, then I can always strip out in my Unisearch up here. I can always strip those out again to suit myself. Okay. So what else have we got here? Yeah, I think I'm up to date there now in what people are saying. So that is what is going on currently in Europe. Let's take a look instead what is going on. Let me pop on over here. Let me change my calendar. Let's take the pulse on what is going on in the US now in relative terms. And then I want to get into the GLP-1 story. Okay, right, here we go. And I'm just going to, again, at this stage now, even though the market is closed, I am going to pull up the real-time results. They are real-time, but at the same time, they can only be real-time when the market is moving. And of course, the market is closed because today is Saturday. And sorry, what am I doing here? I need to pull up the stock viewer instead. That's what I should be doing. So I'm just going to click here in the stock viewer and I'm going to pull up there what is happening with the top. I'll see whether it lands in the top 10 or 20. I think the default there is for, oh no, 10. Okay. So when we look over here now, we've got some very significant opportunities again from the perspective of VST. We've got Nudex Health, Hecla Mining, another mining stock, Micron Technology. And so therefore you can see that none of them contains the Mag 7. Now, by the way, please don't interpret my presentation today on I'm anti-Mag 7. I'm not. What I am pro, though, is making sure that you're actually looking for the best opportunities in the market that suit you. Now, those of you who are traders, right, you're not necessarily going to be interested in VST. You might be looking at RT, or you might be looking at something else. Those of you who might be more fundamentally based, instead, you might be looking over here at the PE ratio, for example. And of course, PE ratio always comes with a health warning. But those of you who would be looking at the ability for a company to earn more money over time, you might be looking at the companies that are having the fastest growing earnings. And I see Reddit is here, Corex Media. Now you might say, okay, here's a company. It's got a sell recommendation, Gorilla Tech, yet its growth rate is at 51%. What does that mean? What that means is the company is growing its earnings quickly. No, 52%. The company is growing its earnings quickly. However, the price is, let me scroll over here. The price is currently $14.97 and it fell underneath the stop price that we have in here of $15.35. That's why it's a sell recommendation. As soon as the stock price breaches the stop, and I'm being intentional there in explaining the difference between the two, That's what triggers a sell recommendation. So I wanted to talk to you about my first 2 points there. One is the outperformance in Europe. Do make sure and give us a consideration there. And certainly as well, you have seen a weakening dollar this year. Now that hasn't helped me at all, right? Because I'm a euro-based investor. I've been investing in stocks in the US, like I mentioned, Interactive Brokers, a range of others. And even though my stock has done well since the dollar has weakened, when I would sell the stock and then translate it back to euro, that doesn't suit me at all. Should that change? Okay, should that change? And it's hard to obviously call where that's going. It's more likely that the US will cut rates and more likely that the ECB will keep rates steady at the moment. So there's no pressure necessarily to push the dollar back up at the moment. All the same though, just bear that in mind, is that you have got a weaker dollar now. And therefore, if you have a strengthening, if you see a strengthening euro, then that can also help you out. Okay. And also, like I said, the Mag 7 definitely is getting the headlines, but just make sure and take a look around. There are some great opportunities in the markets. Now, one other story I wanted to pick up on before we do a deep dive into Dollar General, because I've loads to tell you about this. I want to pull up this graph, right? No, that's not the graph I wanted to pull up. I wanted to pull up this graph over here, where I'm taking a look at, no. I had all this set up and I'm ready to go for you, where I have 2 graphs lined up side by side. Let me just see here now. Who have we got? How can I watch the session later if you want? You can absolutely just come back and click on the same link where you're at now. Since this is being live streamed, it's automatically being recorded as well. So you can come back and see us anytime. Right. Look at this here. This is Eli Lilly on the left-hand side. This is Novo Nordisk over here on the right-hand side. Now, Novo Nordisk is a company that is in Denmark. Massive company, is the founder of, or the producer of Ozempic. And Ozempic was the name, like if I have the graph that I have here for you now is showing you a year, but let me just show you like this stock over 5 years. It just factored in enormous belief in the GLP-1 market, of which I can absolutely understand. 1 in 8 people in America have tried Ozempic or something like that, whether it might be Mounjaro or Wegovy. And there is, I don't know if you saw it, but during this week, the WHO, the World Health Organization, said obesity is expected to double by 2030. Like, that's not that long away. And they have now started issuing guidelines, public health guidelines around the use of these drugs. So they are moving mainstream. And like I mentioned as well, the Trump administration has negotiated a 71% discount on using them when Medicare buys them. So they are likely to become obviously more accessible. Now, if you do, like a 71% discount is a lot of a margin gone. But look at what's happened to Novo Nordisk, right? So you see massive, like to go from, now this is the ADR. The ADR is the American Depository Receipt. I could, of course, move you to the Danish price, but I'm guessing that many of you mightn't be investing in Danish krona. And of course, I couldn't analyze it then from a VectorVest point of view. So the ADR here, as you can see, going from $25 there in October 2018 up to a high of over, what's that, about $150? Like, extraordinary growth. And just imagine the type of growth that was expected to happen there. Now, of course, what has happened is that there has been growth in other drugs, and Eli Lilly has stolen a march on that. And also remember, Ozempic is administered through an injection, whereas Eli Lilly is developing a drug that would be taken from pill form. Okay, so then there's a difference there. The other thing that has precipitated, particularly if I just go back to the past month in Novo Nordisk, they're not just betting their future on GLP-1 drugs, which is an appetite suppressant. Also, they also had, no, that's a very choppy looking graph. Let me go back further just to give you the context. They were also focusing on Alzheimer's, and they had some disappointing trial results in the past couple of days as well. Well, the past 2 weeks at this point, which has precipitated this loss. Meanwhile, Eli Lilly is driving on significantly. Eli Lilly is a company that has a European base in Ireland. So I'm familiar with it, and it has quite a diverse revenue stream, but it is in the GLP-1 race, it is more so the one to watch at the moment. So that is what's happening there. The P ratio of Novo Nordisk dropped down as far as here, down to 13 times. Over here, when I look at Eli Lilly, it's up at 32 times. So there you can see investors are willing to pay 3 times as much for $1 of earnings. And that is, of course, when I'm comparing apples to apples from dollar terminology. So another big story there of 2025. Okay, let me see here. What else are you saying? Thought there may be more elders here, but maybe they watch the replay. Okay. Pop quiz. Anyone recall why Susan wears sunglasses? My brother bought me my sunglasses for my birthday in 2013. I've worn them every day since. I love my brother. I love the glasses, and it's just become a really good habit. And you never know when you might need a pair of sunglasses. And you know what? I never have to look for them. They're always right here. Let me see. I see, yeah, and then that has continued. That conversation about my sunglasses has continued. So you can chat among yourselves about that. Okay, moving on then, I want to get into Dollar General, right? So massive reaction to its earnings this week. Let me pull up the graph. I'll show you what happened here. Look at this, gapped up, right? It gapped up. Dollar General on the 6th of November was at $95 a share. It's now up to $132.37 a share. I, though, would like to cast a critical eye on that. And I want to bring over to you the earnings call transcript, right? So this was released on Thursday, December 4th. Dramatically beat expectations. They reported earnings per share of 128. The expectations were 94 cents, right? So really blistering change in results. And I wanted to dig into why. And I found why. I'm going to go through why. And I'm guessing due to the efficient market hypothesis that the market has digested what I'm about to explain to you. But, seeing a dramatic increase in earnings at this level deserves a very simple question, which is how sustainable is it into the long term? Because the PE ratio, I love the word ratio, the PE ratio has jumped, right? So investors went from paying 16 times earnings a week ago to 20 times earnings today. Like 20 times earnings for quite a defensive. Well, no, it's not a defensive stock. To me, Dollar General is a counter-cyclical stock. If the economy goes into reverse, the likelihood is that you would see a shift from consumption from higher-end brands to the like of Dollar General, which, by the way, it highlights is happening in its own earnings call. So to me, this would be counter-cyclical. So I'm just still saying, though, 20 times isn't enormous. But when you look at the earnings rise here, like the Dollar General's earnings at April 2025 are around 587. It's now up to a very smooth 650. Okay. So I'm going to go through, I have a range of things here. I've listed them up here on my other screen that I want to go through. And I'm going to start off with, yes, this I find very interesting. Worrying slightly. I just want to share about the basket being flat. FLAT, right? So here we are. Here we are, right? Look at this now. It says the market share growth is a testament. All right, so it's had grown its market share in dollars and units. The sales were up 4.6%, up to 10.6 billion in Q3 versus net sales of 10.2 billion last year, right? So up 400 million year over year in the quarter. However, the average basket size was flat. And I think that's very interesting because if people are buying the same amount per customer, the growth is to come from somewhere else. Or else that is hiding another story. And it is, because look at the line that comes next. Within the basket, an increase in average unit retail price. We all know about the cost of living increase and the impact of inflation. And of course, how tariffs have now been baked into the pie. It does say was offset by fewer items on average. Now that is very important. So the American consumer is buying fewer things because of the increase in price. As a result, Dollar General's average basket is flat. Now that does not inspire confidence for the growth of this earnings, does it? Well, maybe not when you look at it first, but when you dig into it, it looks a bit differently. First of all, when you look at the difference between the percent, when you look at the basket between people who go into the store and people who buy online, we see a different story because they're saying we are seeing larger basket sizes than the average in-store transaction for a start, and strong repeat visit rate from customers on our delivery platform. So the way in which Dollar General sees an increase in its basket size is by leaning absolutely into the digital experience. Now you might say, now Susan, come on, Are you now telling me this in 2025? First of all, I am. The e-commerce side, and I would have said the US consumer would have been far ahead of certainly the Irish consumer, maybe not the UK consumer, but e-commerce you've been doing much better at this, we'll say, than us. But this is where DG sees that it really needs to lean into it. And you'll see that it's one of their big bets for the year ahead. But that is interesting, that those who buy online, number one, are buying more and from a basket size. And if you've got inflation, then that certainly helps. So, and they say that they have ample opportunity to further drive incremental sales growth. Okay, now they still had a rocketing earnings. So if the average basket size was flat, and we saw that the sales were up, like where did the actual growth come from? And this is the big story. And twice analysts asked questions in the earnings call Q&A later on. They asked 2 questions about what I'm about to bring up, because this is where the real growth is at. And the question is, how sustainable is it? Before I show you this, can I point out 2 things? Just in case you're not familiar with an earnings call is a call that happens every quarter where a company in the US has to tell its shareholders what's going on. Anybody can join them. I often have, both live and recorded, or you can see the transcript like that. So when I talk about an earnings call, I literally mean like not phone call, but conference call. And the second thing is, in an earnings call, the CEO typically, or the VP of investor relations or senior management anyway, present their story, and then after that, analysts can ask questions in a Q&A, in a questions and answer session afterwards. That's often where the juice is, and that's what I want to talk to you about, because a big reason for the increase in the earnings of Dollar General is actually down to the way in which they manage their inventory. So, and it's just interesting how they're doing this. So here's what they say, is they said, this is where I got the most insight into this, right? Is the very first question was, welcome back, Tony. I have 2-part question on gross margin. Now, gross margin is, if I am Dollar General, and for every $100 of sales that I make, how much did it cost me in order to get the goods in the first place into the store? Let's say for every $100 that I sell, it has cost me $70 in terms of like buying the things that I'm subsequently selling. Then the gross profit margin would be 30%. Now, that is solely a theoretical example. We'll get into what the real number is. But the margin is, let's say, if it was $30 is what I've got left over in terms of gross profit, then my margin would be 30%, because I can keep $30 out of the initial 100%. And they had improving gross profit margin. But the point is, the analyst asks what I would have asked, which is, yes, but if you're doing so from managing your inventory better, that's not because you're selling more. That's not because you're selling more profitable things. You're simply managing your inventory better. So then he says, just curious about your overall confidence in being able to deliver the next round of improvement, whether it's from retail media, mix shifts, which would be selling more profitable things, etc. So he says, okay, maybe I'll kick it off and hand over the second part of your question to Todd. Let me see here. I'm pleasantly surprised that we delivered 107 basis points of expansion in Q3, which means that when it came to gross profit margin, they were able to increase the amount that they were receiving by 107 basis points, or 1.07%. Like, that is very, very impressive. And he said that was on top of that. But from a Q3 perspective, that's despite 79 basis point headwind from LIFO, which is last in, first out. So we're very happy to see continued benefit of some of our other key focus areas, like lower damages. So this is one of the things, lower damages in terms of the stock they're selling. Reduction in markdown, so they're not marking down as much stock, and some other initiatives. And I think the outperformance and shrink was notable during the quarter. So you see here, the point is that a lot of this has been about them actually reducing the amount of inventory that they hold. And the other thing I wanted to show you is they've gotten rid of self-service. Look at this. Self. There we are. So this is another thing that they've done, but you can only do this once. If you think about it, and what I think about where we're at today with shrink, and again, shrink is reducing the amount of inventory that they have. As Donnie indicated, the great thing about our shrink benefit so far is, while we did take self-checkout, which has been a nice contributor, the stores that never had self-checkout, and 6,500 of them, have been very substantial increases, or should I say decreases in shrink and increases in gross margin. So this worries me, because 2 things now have happened. One is that they have managed their inventory significantly better. And by the way, if you go on through the earnings call, they continue to say how they're doing that. which is great and all, but you can only go so far there. And 2 is that the average basket is still flat. So I was still left wondering to think, okay, I can see how they've increased their earnings this quarter. How is that going to keep going? So what I wanted to point out is the absolute opportunity they have for sheer amount of real estate growth. So I'm going to show you this. They have 21,000 stores. Yeah, look at this. With nearly 21,000 stores located within 5 miles, 75% of the US population, along with their robust and growing digital presence, they're proud of their unique position. So you might say 21,000 stores. Okay, right. Does that mean that they're everywhere? No. Look at this. They have approximately 11,000 opportunities for Dollar General stores in the US. They have such an opportunity to pursue far greater growth as long as they're making a profit. If they just go on a land grab, that's going to be the challenge. And then I looked at, right, this is, look at this. No, that's not the number. I want to show you the 4% number. No, operating profit margin. That's what I'm looking for. Operating profit, PRO. Yeah, yes. Here, it is an absolute volume game. Dollar General is an absolute volume game. As a percentage of sales, operating profit increased again, but to 4%. 4%. Like, you compare this to Salesforce's earnings out this week, or you compare it to Meta's earnings out, and this is where, when you look at the Mag 7 or any technology stock, the gross profit margin, the operating profit margin that they have, gives them the scope to be able to invest trillions into AI. Whereas here, the operating profit is razor thin at 4%. That means for every $100 they sell, I was talking about gross profit margin earlier on, the operating profit is at 4%, which just shows how much little room there is for maneuver. So if they can stop people theft, if they can stop damaged goods in inventory, if they can manage inventory better, then you can see how it would have a massive knock-on effect, because the margins are so thin. In addition as well, the other thing, and this just shows how, like, they had an increase in profit of 33%. The other thing, it's a once-off basis, but I just want to point out hurricane. September was the softest period of the quarter, they said, as they lapped significant hurricane activity in the prior year before rebounding to higher levels in the month of October. That is a timing point. Like, it had, I was just about to say the perfect storm, which is an ironic term when you say that compares to the impact of a hurricane. But take all of that into consideration, and that just shows how a lot of things combined on a relatively, some of this is short term. And of course, therefore, you can see why the price jumped up. But remember, if the PE ratio goes up to 20 times earnings, that's where investors are getting more excited about the stock. But I wanted to be critical, and I wanted to see, well, should they be excited about the stock more sustainably into the longer term? So let's now put my focus more so onto the longer term. What I did was I went looking for AI, right? They're all talking about AI, not investing in it necessarily. Like, I don't see Dollar General coming up with its own large language model to rival, Meta's. But I was looking to see about efficiency created from AI. First of all, it wasn't in the earnings call where the senior management were presenting their story. Interestingly, yet again, it came up again with the analysts asking their questions. Oh, look at that now. Hold on now. Let me just get the term that I am specifically looking for. And then I found the real gold. I found the real gold then that I was looking for. One thing that we haven't really spoken about at all is really AI. Now, let me just get that term for you. Yeah, here we are, right? And the one thing we haven't really spoken about it at all is really AI. Interestingly, what they say, so they are putting an investment in place. Now, obviously, the question is whether it'll return either anything or positively. But what I do think is very interesting is they said additional efficiencies that would be achieved through AI, whether it's agentic or generative or whatever it would be, has not captured in the framework at all today. So an investor who believes that AI could deliver efficiencies to the operating margin and thus profits of Dollar General have yet to see them being realized, which is an interesting thought. So if you think that they can actually unlock value, the price is not factoring that in today because it hasn't done anything. It's saying it has laid the foundation, but it's like it was nowhere until I got down as far as here. But the gold I found was here, right? Let me show you this statement. We own the data. And when I say this now, Rick is going to go crazy, right? Yeah, this one, look at this, look. Now, here is the competitive advantage of Dollar General. We own the data for lower end to middle end consumers in rural America, where it is very difficult, if not impossible, for anyone else to have replicated what we know about the customer and how we monetize that over the long term. That is precisely when you combine the core operating model of lower cost items, when you combine that with the data that they have, they're leaning into the e-commerce side of customers. There you go. That's the investing premise. And we also need to combine this with the point I've been making several times now throughout my session, which is cost of living is increasing, income is getting tighter, as in the incomes that people are receiving are getting tighter on an inflation adjusted basis. Strip out AI spending and strip out AI related activity in the stock market, and I think we would see a very different picture of industrial America. And there, where are we at? We are seeing consumers being more interested in shopping around. We see that in the flat basket. So the question is, are higher end consumers coming into Dollar General's gambit? The answer is, yep, yes it is. To that end, it says, we're pleased to see growth once again in our total customer count, with disproportionate growth coming from higher income households. So if you think that the world is actually discounting the levels of potential recession or potential challenges to living standards than what you currently see in the market right now, you can see why, again, Dollar General is there and it's ready to go. The last thing I'm going to say, and I have so much more to say, the last thing that I'm going to say before I hand back, because we are coming right up to time, is I just want to talk about the three big bets, right? The three big bets that Dollar General is investing in, right? Real estate. Yeah. Okay. So what they are absolutely going on a land grab, like I mentioned to you, like we anticipated. They opened 196 new stores in in Q3, and they're planning. Oh, I just want to get down to this. Looking ahead to 2026, we are uniquely positioned to serve an underserved customer in rural America, where approximately 80% of our current store base serves towns of 20,000 or fewer people. They're planning a big land grab. But of course, what one should be critical of as an investor is what are the returns that they're getting out of those. And here we are. This is what I was looking for. While they have not reached the 1-year anniversary of the first stores in the program, so they have Project Elevate and Renovate. So Elevate is incremental improvements. Renovate is, significant remodeling. They have seen 3% of an increase in sales for Project Elevate, and there's 651 of them, and 6% for Project Renovate, and there's 524 of them. Now, the analyst did question, they said, like, that was lower than the guidance given before, and that is, of course, one to watch. But the three big bets are, number one, increase the number of stores and improve the stores that they've got. Number two is lean into that online side. And just going to jump down here. So what they have now got DoorDash and Uber Eats. They are now have connected with them, so that then they're connecting. They have more than 17,000 stores with Uber, and DG delivery is available through their app for more than 17,000 stores as well. So what they want to do is they have enhanced the convenience proposition for our customers, with more than 75% of their orders delivered in 1 hour or less. So the convenience that one might be one, they want to be able to save the time of actually collecting up all of the goods that they might buy in Dollar General. And the second thing is get them quickly. They're delivering upon both. And then the third big bet, and then I'm back to you, Rick. The third big bet then is that DG Media Network. They're also leaning into the data and the reach and the attention that they are getting from their customers to be able to sell that in terms of ad spend. So when we now look at Dollar General as an investment case, the question is the story over? Is it all gone? I don't think so, but I will say that the market is now very much paying attention in a way that it hasn't done for quite some time. We're now seeing that the relative safety is creeping up, it's there slightly under 1. The value of the stock, the VectorVest is saying, is at $67. The price is currently at $132, but the VST over here is at 1.24. So the market has underestimated Dollar General. Dollar General has delivered if you feel that the market is underestimating its ability to deliver upon AI, its ability to lean into its data, if you feel that actually the economy is worse than the data might suggest, and obviously the data is lagged because of the government shutdown, if you think that that is the case, you can see why the PE ratio has risen. If, on the other hand, you think, okay, there's an awful lot of things that happen there, like the higher end consumer, like the flat basket, like the shrinkage when it comes to inventory management, and also the hurricane lapping. When you take all of those four things into consideration, perhaps a lot of that growth is now factored into the price. That's where you would see the other side of the house. So I'm going to stop sharing now. I'm going to hand back over to Rick. As ever, Rick, thank you very much for having me today. Thanks to Clay, who's been producing there in the background. But most importantly, thank you to each and every one of you who have watched this session today and joined us on your Saturday or whenever you're watching the recording.
Thanks so much for that, Susan. I'm going to share back my screen there. And I'm going crazy here, Susan.
Yeah, usually you
Another
do when we talk
earnings
about
call.
data that the tech companies own.
Oh, yeah. You know, my first question was, are they a customer of Salesforce's? Because if they are, then Salesforce owns the data too. And then Salesforce's zero copy network also owns the data. But that's a whole other story, isn't it?
A whole another ballgame.
And the other thing, I searched their earnings call too, just to see if there was any mention of the de minimis exemption. And because I have to imagine that stores like Dollar General, Dollar Tree, all of the different, lower end stores have been scoring, using that extensively over the last number of years, and how much that's going to affect them going forward.
Well, the one thing that comes up again and again is the number of SKUs, which are number of units basically that they have that are under $1. And obviously I know the name suggests that, but 70% of their SKUs when it comes to the holiday season stock that they have are around that dollar mark. So that's where their focus very much is, Rick, in the coming days and weeks. But it's certainly, I found something like Dollar General a very interesting microcosm of what's going on the ground in the US. As you know, in the past, I've looked at Lululemon, I've looked at Apple, I've looked at some of the bigger companies, whereas this one gave me a much greater cross-section of what's going on the ground, and particularly in rural America. Fascinating today.
Yeah, definitely. They've covered that possible hole in data collection for sure. All right, so I'm going to advance here. Just want to remind everybody, well, thanks, Susan, once again, another excellent presentation. And earnings calls are very interesting. It's interesting what gets exposed in them, for me, at least. But just want to remind everybody of the special presentation entitled How to Safely Deploy a Low-Risk Portfolio. This from Friday, of course. It was delivered by Steve Chappell, Director of Global Trading Systems Development here at VectorVest. So if you haven't had a chance to check that out, make sure you do so. I did see a comment on one person. I think it started with JR saying that the ability to check the views in other countries didn't work on their computer. So I just wanted to make sure I covered this quickly. Hopefully folks know you can have multiple versions of VectorVest 7 running on your system. Of course, it would be limited by the amount of resources you have on your system. But in order to check the views for any other country, now I already have VectorVest 7 open for the US on my computer. I've got another login screen that I put up here. And what might not be apparent to folks is that you can click on the flags here. All right, so you can see I logged into the US previously, so they're the selected flag now. Let's say I wanted to check out Susan's essay. So I'm going to click on the European Union flag. I'm just going to move my screen off here for a second while I log in, enter my username and password, if I can spell properly. All right, and I'll bring that over. And as we're logging in there, you can see here I've got the US software up. I'll bring over, now you can see it's still white. I'm just going to change the color of that for our screen here, so that looks a little bit better. All right, so we'll change the look, and here you can see we've got VectorVest 7 Europe end of day opened as well. All right, so all we would do now is click on the Views tab. And since we're on Saturday, the last views was Friday. You can see the Friday views typically are in gold. All right, and the other one's in green here. There you can see another Friday. That would have been Susan's essay from a week ago. But now we can either click on the title here. You can also click on the calendar on the date over here. And that will open up the essay. You can see now we have what is a short ETF, December 5th, 2025. And if we scroll down past the market in review, here you'll find Susan's essay, What is a short ETF? And you'll be able to go through her essay there and read it. All right, and you can do that for all of the other countries as well. So hopefully that helps out there. And yeah, and just looking at some comments there as well. All right, so special presentation, check that one out if you haven't, but that will bring us to an end. So we do want to thank all of you for spending part of your weekend with us. We always enjoy that. Thanks once again to Susan for an amazing presentation. Clay, of course, for keeping us all in line and behind the scenes. And once again, all of you. So folks, if you do have any questions, need any help at all, don't hesitate to reach out to product support and training. You can see the number there, 1-888-658-7638. We've got the local US number there as well for those that can use that. As mentioned initially, this was broadcast live on the VectorVest YouTube channel, so the replay will be available on the VectorVest YouTube channel pretty much immediately after we're done. I've also got the support@vectorvest.com email there at the bottom too. Okay, so thanks again, folks, and you're welcome to all those folks putting thanks in there. So have a great rest of your weekend. Stay safe and healthy out there, and we will catch everybody back in the markets for another trading week next week. Bye for now, folks.